update. Let's take a look at cake over here. Now, on Twitter, I did say that we would do this on cake. We would come up. We swept our internal range over here, and we would come up and take out 235 right over here, and then we would come back down towards the fibs before we continue on higher. And we did exactly that. We went ahead and swept the high over here, came down towards the 786. Have your first initial advance, a throwback or a partial decline before we grind on out of here. So we're perfectly calling all these moves down to the 10-minute time frame here, and as long as we get above 235, then I don't see a reason why we wouldn't be heading towards this 4-hour inefficiency right over here. Okay, we'd be targeting this inefficiency right here, which would also be sitting at the 702 and the 618. Okay, so around this region. And then we can call this our spring. So we can use this as our range right here. You had your selling climax, you had your automatic rally, your secondary test, your failed breakout, your secondary test in phase B, slightly sweeping your secondary test lows right over here, and then this is like a ball underwater, and we would move towards this inefficiency right here back at the 702 618. Now as soon as we get above the 702 sitting at around 270, then it's very likely that we'll see a further push to the upside, and then we can say that this correction is finished. Sometimes this is what you get in a bull run. Like during the move up, you may get small ABC corrections. Most of the market thinks we're going to continue on lower, but it was just a pause, a small pause in the overall trend, right? So as long as this low holds over here, sitting at around 212, then I don't see a reason why we wouldn't be heading towards $7 next, which is the 61.8% fib, or the 1.618, measured from our March high down to our August low. So this is where it is right here. You see $7. This is the 1.618, and I don't see a reason why we wouldn't head there, as long as we can get back above the 702, sitting at 270. Okay, so I hope you guys enjoyed the video. Just continue to hodl. Everything looks good so far. Once we get above the 1.618 at 770, then we would be heading towards the 2.618 at $11, which is also the 23.6% fib when we take a fib from the all-time high down to the low on the linear scale. You see that? How it perfectly lines up at $11 right here. And then we would also be targeting the 3.618 around this region at 15, 16 bucks, which would also be the, so around 15 to 17 bucks. You guys see that? So these two regions right here, around this region. And then I would be expecting a decline, or a partial decline, maybe 50% of the way down, and then continue up for the fifth wave. To then go on to hit our one-to-one target of this right ankle broadening wedge. Okay. At the 50% fib. At 22, around this region. Okay, so right here, and then get above 22, then it's likely we'll head towards the 1.236, 1.382, which would be 54 and above. Okay, so hope you guys enjoyed the video. If we cannot get above this smaller range high that we're in here on the 10-minute time frame, then it's likely we'll just see a manipulation or sweep of these range lows sitting at 220. Tag the 200-day SMA again. Or sorry, tag the, let me see where the, yeah, so it'd probably tag the 200. It'd probably do like this, probably wick like that, and then continue on up like that. If we lost 224, but so far everything looks good considering that Bitcoin dominance is dropping right now. And remember what I said in my last video. Bitcoin dominance is doing the exact opposite of the altcoin market. We can take a look here at the weekly MACD, and we can see that we have Class C bearish divergence here. Higher high on the price and equal high on the MACD. Now it looks like we're coming down to 54.59%, and that would confirm that this in fact is our top here on Bitcoin dominance at the 618. Right here. Boom. Okay, hope you guys enjoyed the video. If you have any questions, please feel free to let me know. And if you want to stay updated, then click the link in the description below. Peace out and take it easy. See you in the next one.